Okay, so we are recording. We at 5th of May 2026, we took two trades. One was instant TP and the second was closed manually. So let's go walk you guys through how we analyzed the first trade. So at 8:53 a.m. Pakistan Standard Time, I open the charts and I see these two huge candles rejections. I see the price is rejecting this area. I go down to the 15-minute time frame and I see more information. I mark this zone as my resistance and this as support. So what happens that 30-minute candle closes here. The next 30-minute candle opens and closes below this support, giving us a nice breakout. And the at this point the 30-minute is currently open. The first half has passed and giving us a breakout. So the next candle, the next 15-minute candle and the current 30-minute candle is open. 15-minute candle just wakes up and breaks this previous breakout candle's low, giving us an entry point. We enter here with a stop loss about 17 to 20 pips and we close at 26 pips. That is roughly 1-to-1 risk to reward. So that's how I traded my first trade of the day, and that worked out perfectly fine. So perfect trades happen when we have one or two time frames confirmations. We can read two time frames perfectly, then we get a perfect trade like this. Now on to the second trade. For the second trade, we saw these charts. Our resistance moved up there and support was roughly the same. This zone, this area is highlighted. We have bigger candles on the 30-minute, so we went down to the 15-minute. So what do we see here? There is our resistance, price rejected here, came down and closed bullish, giving us a support, so we can look for buys. So what happens that so at this point the time is 11:53, so it is about to, the London session is about to open. So what we do, we get a scenario where this 15-minute candle closes above this resistance. If we see very closely, we can see that there is some difference. So this 15-minute candle have closed just above this resistance area, just like here we got a breakout. This is the same situation. At this point we price pushed down, made a lower wick, and then there was this high, broke this own high. Then we entered because the time was 11:53 on 12 a.m. 12 p.m. Pakistan. We have London open, so I anticipated that at this point with a stop loss of 36 to 37 pips, we can push up about 1-to-1. That was 37 to 38 points. So from here the candle closed below my entry point. I did not close any of this, so the next candle just breaks the previous candle's high and just pushes up to give us nice 1-to-1 risk to reward. Both of those trades were at with the 1% risk, and we got our 1-to-1 risk to reward. And both of these trades were executed on the 15-minute with 15-minute confirmations, which is very contrary to what we saw on the previous week's simulations. All the trades we traded on the 15-minute time frame per losers, but here we saw candle confirmations, and on the second trade we had a time confirmation that price is flipping bullish, and we could keep pushing bullish with London open volume. So we executed and got 1% from each trade, 1.16, 1.18. So that was it. Now we can close this and go to how we journal our trades. So I have this template here. I will fill in the details and you guys can see how do I journal my trades. Let's see.